This is why you are not getting funded. And I'm not talking about your strategy. I'm not talking about your entries. I'm not talking about which pair you trade or what session you use. I'm talking about something that runs deeper than all of that. Something most traders never look at honestly. I have watched a lot of traders go through this process. Some get funded quickly and they stay funded. Others keep failing the same challenge over and over again, wondering what they are doing wrong. And when I look at both groups, the difference almost never comes down to strategy. It comes down to a handful of specific habits, decisions, and mindset patterns that separate one group from the other. Today I'm going to walk you through exactly what those differences are, and I want you to be honest with yourself as we go through each one, because if you can see yourself clearly in this, that is where the change starts. The first difference is how they treat losing trades. A trader who gets funded accepts losses as part of the process. That sounds simple, but in practice it is one of the hardest things to actually do consistently. When a funded trader gets stopped out, they log the trade, they move on, and they wait for the next setup. The loss does not change their next decision. It does not make them trade bigger to recover. It does not make them jump back in immediately without a proper setup. The loss just is what it is, a data point, part of the job. A trader who keeps failing does the opposite. The loss triggers something, maybe anger, maybe frustration, maybe just a quiet refusal to accept it. And that feeling pushes them into the next trade before they are ready. Position size creeps up because they need to get it back faster. The stop loss gets moved or removed completely because they are convinced this one will work. And one loss becomes 3 or 4. The funded trader does not have better trades. They just have a better relationship with losing. They have accepted that losses are not the enemy. Emotional reactions to losses are the real enemy. The second difference is how they use rules. A trader who gets funded builds rules before emotions enter the picture. They decide in advance. This is my maximum daily loss. This is what I do if I hit it. This is how many trades I take per day. This is what I need to see before I enter a trade. And when they are inside a challenge, those rules do not bend. A trader who keeps failing treats rules as suggestions. Everything holds until it gets uncomfortable. They know their daily limit, but today feels different. They know they should stop after 2 losses, but the setup looks really good. They know they should not revenge trade, but they were so close on that last one. The moment rules become negotiable under pressure, they stop being rules. They become just ideas you have when everything is calm. And calm is not when you need them. You need them exactly when the pressure is highest. That is the whole point of writing them down before the challenge starts. The third difference is their relationship with patience. Watch a trader who consistently gets funded and you'll notice one thing immediately. They do nothing most of the time. They just sit, they wait, they watch the market move without touching it. They let setups that almost match their criteria pass without entering, because almost is not good enough. A trader who keeps failing cannot sit still. Every candle feels like a missed opportunity. Every move the market makes without them feels like money they are leaving behind. So they enter early, or they enter on a setup that kind of looks right, or they take a third trade when their plan only allows 2 of them. And each of these small decisions compounds. None of them is catastrophic on its own, but together they create inconsistency. And inconsistency is the thing prop firms are specifically designed to identify and filter out. Patience is not a personality trait you either have or you do not. It is a skill. It is built by trusting your process enough that you are not afraid of missing a trade, because you know another one will come soon enough. The fourth difference is how they handle pressure. Being inside a challenge creates a specific kind of pressure that is different from normal trading. There is a profit target above you and a drawdown limit below you, and every day you are somewhere between the two. Funded traders have learned to trade inside that pressure without letting it change their decisions. They know the target exists, they know the limit exists, and then they trade as if neither one matters. They focus only on what it is in front of them. This setup, this moment, this criteria. Does it qualify or does it not? That is the only question. Traders who keep failing let the pressure in. When they are close to the target, they start protecting it instead of trading. When they are close to the limit, they start forcing trades to recover. In both cases, the evaluation stops being anything about trading and becomes about survival. And survival mode makes bad decisions. The target is not something to chase. The limit is not something to fear. They are just the edges of the space you are working in. Forget they exist and just trade your trading plan. The fifth difference, and I think this is the biggest one, is how they see themselves. A trader who gets funded has decided they are someone who follows a process. That is their identity. Not someone who is trying to make money, not someone who is trying to pass a challenge, someone who follows a process and a trading plan every single day, regardless of the outcome. That identity makes 1,000 small decisions easier. Should I take this trade that does not quite meet my criteria? No, because I am someone who follows my criteria. Should I move this stop loss? No, because I am someone who respects my risk rules. Should I trade after hitting my daily limit? No, because I am someone who closes the charts when the day is done. Every rule becomes easier to keep when it is connected to who you are rather than what you are trying to do. A trader who keeps failing sees themselves as someone trying to get funded. And trying is a different headspace than being. Trying means the goal is out there somewhere. Being means you are already the thing you need to be and the results will follow. So here's the honest question I want you to sit with after this video. Which side of each of these things are you actually on right now? Not which side you want to be on, not which side you think you should be on. Which side are you actually on if you are being completely honest with yourself? Because that gap between where you actually are and where you need to be, that is your real work. Not a new strategy, not a new platform, not a new course. The work is internal, it's inside you. And the good news is that every single thing I talked about today is learnable. None of it is fixed. None of it is something you either have or you do not. It is all something you can build, but only if you can see clearly where you are starting from. If you want help building this properly, the mindset, the process, the full structure for getting funded and staying funded, I have a mentorship program called the Profit Blueprint. It is for traders who are serious about doing this the right way. Link is in the description if you want to apply and find out more. And if you are looking for a platform, I recommend Hola Prime. They are the fastest in the industry when it comes to payout speeds. They have a no payout denial policy and very transparent rules. You can use code NFX for 30% off. Thank you guys for watching. I'll see you in the next one.